What's up, guys? It's September 27th, 2024. It's crazy. The year is almost over. 2 months left. Hope you guys been having a good year. I've been learning a lot. The daily chart, 45-minute chart. I was just comparing where we are in terms of the 19th close, this breakout bar. Close on its high, but it's getting bad follow through. 26th, we closed above it, but we had a tail. And then on the 27th, it's a lower high for the bears. So here's that lower high. I said it's the 27th today. I'm doing this on a Sunday, but I'm having the correct dates on there. Yeah, bears get that lower high here, which is right here. Bulls want to start to see strong closes above, well, bulls want bull bodies above here, and bears want to come down. It's been a while since we've tagged the EMA, so maybe a pullback is warranted, or maybe this channel is strong enough. This gap is still open, but there are no gaps up here. That's not good for the bulls. Well, it's not bad. It's just, you want to see gaps. There's gaps here, gap there, gap there. Bears are getting gaps now, so we'll see what happens. If we gap up, bar 1 is a range bar, bar 2 is bear bar 3 is follow through, bar 4 could be the pullback, and bar 5 can be that second leg down. So what do I mean by that? Leg 1, pullback, leg 2. And then the bulls get their rally. They tag the EMA here. This is a news bar, I think it was. Tries to break out. It ends up having more tail than body. Bar 8, inside bar. Bar 9 breaks the channel low. Bar 10 is a pullback. Leg 1, pullback, leg 2, pullback, leg 3. Tries to go more sideways at highs than making new highs. Bar 12 has a really big tail. It is closing above 11, so you could say this is follow through for 11. But then the follow through for the follow through is bad to pullback, a very deep pullback testing this high versus 14, and then again, bad follow through. Bulls get one chance to get out here. If they don't get out, we get a bear channel breaking out below the EMA. 17, 18, 19, 20, 21. Wait, 18, 19, 20, 21, 22. The bars are growing. There's a lot of tail on them, but by the time we get to 22, it's the best looking bear bar and it's under the EMA. It could be a pullback. That's 4 bear bars in a row, 5 bear bars in a row. 25, bad follow through. 24 looks like that pullback. Bulls get a bad close. 25 reverses lower, so now we got a lower high. It's a type of bear flag here. It's channeling lower, or you can even say this is a spike in channel. I kind of saw this as a double top here and here. 28 being the breakout, and then we channel lower into the higher time frame EMA. Bulls got a wedge top. They tried to break out in reverse, but it ended up being a wedge top bear flag. So what do I mean by that? Leg 1, pullback, leg 2, pullback, leg 3. 3 pushes higher for 43. 44, strong bear bar right here. Reversing the EMA. So the first touch of the EMA, we had sellers. Big up, big down. I think it's safe to say we're going to go more range bound. We have had a lot of range bound price action since the open, so range bound. These bars have lots of overlap. Not too many gaps are open here. Give me 2 seconds, guys. Thank you. Not too many gaps are open here, so it's not the strongest bear channel. We've been selling, rallying, selling, rallying. This kind of looks like a big leg 1, pullback, leg 2. Anyways, more range bound price action. 45 inside bar, not the best follow through for the bears, and then they get their own leg 1, leg 2. Leg 1, pullback, leg 2, pullback, leg 3. Wedge bottom, 51 starts another rally. However, look at the body on 43, and then look at 54, and then look at this. See how each time the bulls came to the EMA, they just got a little more, but we still sold off. So it takes time for the trend to turn like a giant ship. It takes time to turn, and then just reverse sharply. Here, look, a little bit of a body. Here, they finally get a bar. Here, they get multiple bars, but still the bears sell because there's a lot of selling pressure. There's different types of gaps open. I only talk about one gap, but this is a gap. This can be a form of a gap. This can be a form of a gap. Gaps here that gets closed. So there's lots of ways this can go. Leg 1, pullback, leg 2, rallying to the EMA, and we see 3 in range bound price action. It's implied. Leg 1, pullback, leg 2, pullback, leg 3. The tail on 55 is the third push up, creating a double top here. So we could say another double top bear flag. And 55 makes a good sell for like 1 leg 2, like 1, pull back like 2. Inside bar 58, kind of looks like a gap up right here. Sells off 60, like 1, pull back like 2. Bag closes 61. It's actually a range bar. There's more bulls buying than bears selling. The low of 61, more bulls buying 62, and then we rally for 2 legs. Leg 1, pull back leg 2. Again, now we have 3 lower highs. Right, again, and it's range bound, so we have to count implied legs. This isn't really counting implied legs. These are actual leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Or you could say the market cycle resets when it breaks out leg 1, pull back leg 2, second leg trap in a range. Let me go sideways. So this was a range day with more selling pressure. There's a lot more sideways price action, right? If we box up all the sideways price action, how much? So here's a range, right? So we didn't. Okay, we can try and make these boxes a little smaller. We'll go body to body, just so we can see a little bit better. The high of this body, swing low of these bodies. See? So how much was really trending? These bars, and there's not really a gap open. So we did have a lot of range bound price action, but we had downwards pressure today. So selling the EMA worked. Leg 1, leg 2s. A lot of leg 1, leg 2s. Leg 1, pull back, leg 2. This is strong enough for its own leg 2. Leg 1, pull back, leg 2. Or you could argue we're in a trading range, and trading ranges get delayed second legs. Leg 1, pull back, leg 2, and then this whole price structure gets leg 1, pull back, leg 2. This looks strong enough for its own leg 2. Leg 1, pull back, trading range price action, leg 2. This price structure also has its own leg 1, leg 2, leg 1, pull back, leg 2. And the leg 1s of all these are micro channels, right? So there's bearish pressure stacking up. And then we think, okay, yeah, this looks strong enough to keep going. And that's how we can go with the momentum. Bag close on 24 shows us that if you bought 24 thinking it was a reversal, look at the price action leading up to it. The bear price action is actually picking up. 18 was small and it gets bigger, bigger, bigger. And by the time we get to 22, it's a bar closing on its low. Let me sell off again. Leg 1, pull back, leg 2. There are so many ways to look at this. Leg 1, range bound price action, deep pullback. Leg 2, that's one way you might have been able to catch some shorts early. I didn't see it like that until we were around here, and I was like, oh man, this could be a leg 2 from the prior day, 2 days ago, or yesterday. So again, let's just go through the gaps. I don't think there were too many gaps. They got closed, gap up, no gap. I just seen one right here. Gap there. There's a zero height gap right there. See how there's like, this is a really weak bear trend. There's a gap right here. All right, gap, but it gets tested right away, 34. Bulls try and put a gap, it gets closed, and then we got another bear gap. It's a weak gap because there's 2 bull bodies. And then we get another gap down here that gets closed immediately. This is the biggest gap late in the bear trend, so it's the climax. It's a climax gap, and then climax gaps are usually good reversal targets. So if you start to see 63, you could go for a scalp here. I don't do that. It's not what I'm trying to do right now. But there are many setups. Yeah, you just got to find what works. I like second legs. I tried trading breakouts for almost all year, and I just have to admit it's not the best thing for me. Excuse me. 2 seconds here. I've been trading breakouts all year, and it's just not the best thing. Trading a breakout is a 50-50 situation. Trading a second leg can be anywhere from like a 65 to 75, 85% situation of seeing a continuation. So I'll be making a little bit less money, but I'll be making high probability, which is what I'm looking for here because I am tired of blowing up live accounts. All year I've been passing these live sim accounts on Apex, whatever. I'm not trading with Apex right now. But I've been passing like evaluation accounts, and then I freaking blow up. And I'm like, you know what? I need to switch it up. This is not working. It's not working. So I'm switching up my trading, and I'm trading very small 1 micro on simulator right now. We'll just see how that goes. Anyways, you guys, I hope you guys had a good weekend. Thank you for your support. Thanks for always tuning in. I'll talk to you guys tomorrow. And if you learned something, share the show. Have a good one, guys. Thank you. Bye.